So I'm going to be going over how to understand the loan estimate, and I'm not going to go into detail on every single aspect of this. I'm just going to be looking at it from the standpoint of if you receive multiple loan estimates from lenders, how to understand which one is charging you more or less. And a lot of times people get these from lenders and they can be deceiving because they look at the bottom line number and that bottom line number can be manipulated. And I'm just going to kind of go through and explain to you how that can potentially be done and what you should be looking at. So in this case here, this is a purchase for an $800,000 loan. This is the first page of the loan estimate. So sorry, $8,000 purchase price for a property. This is the first page. And this first page is only going to detail like a bird's eye view of what all is coming out. So it has a $640,000 loan amount because you're putting 20% down on an $800,000 property, a rate of 3%. And monthly principal of interest in this line here is just the mortgage payment. It does not include the taxes and insurance there. So that $26.98 that you see there is just the principal and interest payment. Now down into this section, it'll talk about your escrow payment, which would be your taxes and insurance. So for a total payment of $3,358. But if you have an HOA, you have to be careful because the HOA does not show up into this line here. The HOA shows up down here under estimated taxes, insurance, and assessments. In this case, the HOA is $1,000 a month. So you'll see that there's a $660 estimated escrow here and a $1,660 estimated monthly payment here for the taxes, insurance, and assessments. That's because the HOA fee is not paid with the monthly payment. It's paid separately, and then they put it down here. So this actual mortgage payment here, or total payment, it's going to be $4,358 when you calculate all the costs associated with it. But this $3,358 will be paid to the mortgage company, which includes the escrow account, and then an extra $1,000 a month will be paid out to the HOA. So then it gives you the final cost at closing. It says your total cash to close would be $180,920, and it says $20,920 is your estimated closing cost. And this is the number that can be manipulated here, because while you see $20,920 here, a lot of this, or the majority of this here, is actually estimated costs. So that means that this number here is not the one that you're looking at when you're comparing lenders. The number you actually want to look at when you're comparing lenders is this box A here, which is the origination charges. These origination charges are the only cost that the lender has any control over. Everything else is going to be an estimate. So this is what actually the lender charges you directly from their bank. Everything else is going to be listed in section B, C, E, F. All of that stuff there are all going to be charges from third parties. And as a lender, we're required to disclose an estimate of what that is, but we don't have control over those costs. So for example, in this case, the origination charges are $1,470. It's broken up to a bunch of different, ways and fees, but that's just a fancy way of saying we're charging you $1,470 on this purchase loan. If you look down here under services you cannot shop for, these are things that you're going to have to pay for regardless of what lender you go through. So you're going to have to pay for an appraisal. You're going to have to pay for a credit report. You have to pay for a flood cert. This verification fee is kind of a new thing that a lot of people have on there. Some employers charge a verification of employment fee. If the employer doesn't charge that, then that goes away, and that fee doesn't belong on there. But basically, it should be disclosed on there because it's a potential fee. Again, when we're disclosing these, we should be putting everything that could possibly be on there. We should actually be over disclosing. So the number that you receive when you see that $20,920 should be this is a possible number that you would get, but most likely that number will go down as things start to get removed, like the verification fee, if the appraisal is slightly less, things like that. So under the services you cannot shop for, which is section C, or services you can shop for, which is section C, this is where all your title costs go. And the title company, each title company is going to have their own costs for what they charge for their title insurance and what they charge for their closing fee and things like that. These are not things that the lender has any control over, but we do have to disclose them for you when we send an estimate over to you. And what a lot of lenders will do is they will underestimate these fees because they know that you're just looking at this bottom line number. So if they underestimate these fees here, they can make it look like they're cheaper than the next guy. But what the reason that that's a bad thing to do is because if they underestimate these fees and then you get the actual cost from the title company and they're higher, well, then they'll say, well, hey, we don't have any control over those costs. We actually just sent you over an estimate. Now you have to bring an extra $1,500 or $2,000 or whatever it is to closing because they underestimated the fees that they were disclosing to you. So This is just something to be aware of. This is not something you should be looking at and comparing when comparing one lender to the next, because they have no control over these fees here. Then you're going to end up with the state taxes. Those are generally going to be what they are. They're standard rates. If you plug it into the computer and it spits out a number to you, those are generally pretty accurate. The homeowner's insurance, normally starting out, you don't have an actual homeowner's insurance quote, so that's an estimate. So, while we put $2,400 in here for the homeowner's insurance for this condo, a lot of times condos are cheaper than that. If you ended up getting one for, $1,800 or something like that, then this number changes and that's what you pay. So again, another example of, where you want to over disclose, you want to give a higher number than what you think it may be, because that way you're not taken by surprise if it actually does come in higher. You don't want to, disclose $800 on here for the insurance, and then it ends up being, $1,800, and now you're $1,000 off on the estimate of what you're supposed to bring to close. And then the escrow account, if you do have an escrow account, is going to consist of whatever the cushion amount needs to be for the escrow account and the required amount of taxes, depending on what time of the year that you'll be closing. So anyway, not trying to get into what each and every single one of these estimated fees mean. For the sake of this tutorial here, the main thing that you want to pay attention to, just to reiterate, is the amount of the charges in box A, because these are the only charges that the lender has any control over and what they can charge you. Alrighty,